38 pips. That's going to place it pretty close to the highs. To get onto the other side of the highs, if you want to have a conservative stop, better is 50 pips. My target for this is down here at 97.05. So you can see we've got a pretty good stretch, about 175 pips on the downside. On the upside, long 1.9930. Again, here we're looking at a fairly decent stop, but slightly larger on the long side. This one is going to be a 44 pip stop. That is simply because we've got a little doohickey piece of volatility. I'm sorry, I am tired. Wick, we have got a longer wick pointing down there, and the market truly could dip down and continue going. So really on the long side, you want to keep your eye on this. If we do get stopped out into the evening time here, then I would certainly look to re-enter if the market does manage to come back up. So standing policy applies really. Keep your eye on the quick start videos. You want to take a look at the trend setup, especially with the trend checklist. I do want to make a comment. I was on the phone today with one of the crew members, Al, and we were going over some of his trades, and his performance wasn't quite where he wanted it to be, but I think we managed to narrow it down to really one main aspect of his trading. And this is a caution that I would have for everyone. If you find yourself, feeling pressured to get in a trade, or if you just think, boy, there's some opportunity here, and I think I've got a trade, the one rule of any, I think, in the kit that can really save you from some heartache is looking at the 2-to-1 ratio. Now, it's not to say that you have to get out at 2-to-1, or you can somehow predict what your ratio is going to be. That's a common misconception with traders, especially traders that have a math background. The 2-to-1 is simply a guideline, because here's the reality of trading, folks. If you come into trading and you're risking 50 pips, let's say, to make 50 pips, boy, you better be right 80% of the time, or you're going to run into trouble. Simply because, well, I won't bog you down with the numbers. Take a look. If you're a Plus member, take a look at the expectancy videos over here on the left. If you're not a Plus member, get into the discs. I believe it's on disc number 8, possibly disc number 7, where I go over some of the money management rules. But bottom line is, if you're risking what you're looking to make, that is a losing proposition unless you're a very, very skilled trader. Also, if you find yourself in a position where you're thinking, I can probably make 20 or maybe 30 pips here, another bad idea, because think about it. In order to fit the 2-to-1 model, that means if you're going to risk, if you're looking to make 20, that means you can only really risk 10. And think about it, the spread on a good broker is 2 to 3. On a typical broker is 5 pips. So you're already halfway down or halfway to your stop right when you get into the trade. Again, a bad idea. Remember, you want to pick your trades so that they're the best possible execution, where you have a trade set up like this, where there's a lot of room for the market to move to the downside, a ton of room for the market to move on the upside. I mean, look at this. The market's really going to have to get up to 2.0032 in order to run into any kind of resistance. So we've got a nice overhead to go here on the upside, nice overhead or nice downside on the trade. This is really what trading's all about. Don't feel like you've got to get in there and trade every single day. Not every day is a money day. Not every day is a payday. So if you keep that in mind, keep your powder dry. We do have, I think, a really good setup coming into tomorrow's session.